It took only a little and the insurance and financial giant no longer had to be among us.
The future for AIG's private shareholders is bleak. Analysts say the stock could be worth nothing once the company has paid back the U.S. government. Citigroup put the odds at 70% that AIG's shares will be worth zero.
In 2008, American international group AIG found itself in the middle of the global financial crisis and played a key role in it. This was due to huge investments in derivatives linked to mortgage loans, which began to fail and caused huge losses. $180 billion injection. To prevent the complete collapse of this giant institution, AIG was given a buyout of more than $180 billion. This amount represented the largest buyout ever given in the global financial system. Before the crisis, AIG was perceived as a solid and reliable institution. However, financial problems and risky investments eventually severely damaged its reputation, so a seemingly invincible financial giant found itself on the brink of bankruptcy, an example of how vulnerable even the biggest players in the financial markets can be in the turbulent times. Welcome to Invest with Jiri. Today I'm going to focus on AIG, going over background information, history, company fundamentals and outlook. This is a video as part of the S&P 100 Stock Analysis playlist where I analyze all 100 companies in the index. In past videos, I've discussed stocks like Walgreens Boots Alliance, Simon Property Group, Capital One and BNY Mellon. Check out the playlist and the link to watch the individual videos. What products does AIG offer? It is an international company specializing in a wide range of insurance and financial services. Its multidisciplinary framework includes insurance. Its portfolio includes life insurance, property insurance and liability insurance for individuals or companies. Commercial insurance. AIG provides commercial insurance for businesses of various sizes and industries, covering a wide range of products including property, liability, workplace, accident and cyber risks. AIG is also active in reinsurance, a form of insurance for insurance companies. This helps reduce the risks associated with insurance claims payments. Investment services. The company manages investment portfolios and offers various investment products including funds and other financial instruments. AIG also engages in the money and the capital markets where it provides various financial products and services that are targeted to corporations and institutions. Price development of AIG share ticker. The company has been listed since 1962 and has experienced several turbulent periods. Its share price peaked at $1,750 in 2001, only to subsequently fall to a price floor of around $5 in 2009 during the financial crisis. Let's take a look at the main fundamentals. Currently, AIG has a market capitalization of $43 billion, a revenue of $51.5 billion and earnings of $4.8 billion. If you look at how sales and earnings have been trending, we can see that since 2013 the company's sales have been steadily declining and with that, earnings have been declining. In the end, it looks promising, but I think the downward trajectory is obvious. EPS or earnings per share has declined for 4 consecutive quarters. That's not exactly a good signal to investors. It means the company is generating less and less earnings per share. As of June 30, 2023, EPS is at 6.8, which is a relatively high number. It shows that even so, AIG can keep costs down and be efficient in its processes. PE ratio or price to earnings ratio. This is the ratio between the share price and earnings per share. As we can see, the PE is at 8.9 and is one of the lowest among the peers. A low PE ratio indicates that the market has lower expectations for the company's earnings growth or perceives a high risk associated with investing in the stock. The average among AIG's peers is 23.4. And let's briefly review other fundamentals. Gross margin 31.3%. That is what percent of sales remains after deducting the cost of production. That's a nice number. Net profit margin 9.39%, which is the industry average and shows what percent of sales remain after all costs including taxes and interest are deducted. Debt ratio tells us how the company handles debt. In the graph from 2009 onwards, we can see that the company has come out of the worst. It started at a debt of around $127 billion and a debt ratio of 2.39%, and has now taken it to $2.79 billion and a ratio of 0.06%. The debt ratio measures a company's financial leverage and shows what percentage of its assets are financed by debt. Dividends and dividend payout ratio. The company pays dividends quarterly and the current dividend yield is 2.4%. If you were a dividend investor, this is a low yield. However, the market average is even lower at 2.2%. If we look at the dividend yield historically on a 5-year chart, we see the value fluctuate between 2 and 4%. AIG has a payout ratio of 20%. That is the ratio of how much profit the company pays out in dividends. 20% is a low number. I know of cases with values around 90%. Those are not healthy numbers anymore, and it means the company is spending almost all of its profits on dividend payouts. Historical milestones of the company. In 1919, the company was founded in Shanghai, China, as an insurance agency. The name originally stood for American Asiatic Underwriters. In 1939, AIG began operating in the US and opened its first office in New York. 1962, AIG was listed on the stock exchange and became a publicly traded company. 1967, AIG expands internationally and opens offices in Europe. 1980, the company began offering insurance products for individuals and families. 1987, AIG becomes the world's largest insurance company by market capitalization. 2000, AIG expands its services into financial markets and investment products. In 2008, AIG has a major existential problems during the mortgage crisis. 2009, AIG implemented a 20-to-1 reverse stock split to reduce the number of shares and increase the price in order to improve its financial position in the market. After 2010, AIG gradually sold some of its assets and focused on its core insurance and financial services businesses. Comparison of AIG with competitors. AIG's main competitors include Allianz, Aflac, Marsh McLennan and Esurance. Let's take a look at an interesting comparison of CEO popularity among the 169 employees at AIG. Amongst competitors, CEO Brian Draperl ranks in 4th place. What's the quality of AIG's products? 62 customers rate the quality of products provided by AIG Insurance 4th amongst other companies. On a scale of 0 to 10, how would you recommend AIG to a friend? AIG came out a nice 2nd in this comparison. In the price score comparison, AIG also comes in 2nd among its competitors, and in the customer service comparison, AIG comes in 3rd. In my opinion, what is the future outlook for AIG? Personally, I'm disappointed with the state of AIG survey. Since 2009, their financial results have been inconsistent. It is true that they have shared most of their debt, but the company's fundamentals are not improving fundamentally over time. However, there is some potential. As we saw during the 2009 crisis, both the Fed and the US Treasury Department were willing to bail out the company, and I think they will do so again in the future, but are willing to invest in the company that clearly failed to manage its investments and nearly went bankrupt? You probably know that I'm not inclined to invest in financial companies, so I personally wouldn't buy AIG. But don't take my word for it and decide for yourself, according to your analysis. AIG was a huge company. Its capitalization reached $240 billion in December 2000. All of that is in the past. It now has a size of $43 billion, which is 6 the original size. And that's all of the analysis of AIG stock for today. If you learned something new, give the video a like and I look forward to see you next time. Have fun and invest wisely.